Today we're going to be talking about different types of real estate strategies. So let's get right into it. So a few of the different asset classes out there are land, commercial, to include office and retail space, multifamily apartment buildings, and single-family residences. You know, land is great because there's easy management. You don't have tenants in place, but correspondingly, you don't have any cash flow coming in the door. So you're reliant on only one form of income, being future appreciation. And Jimmy and our books, in Jimmy and my book, that is considered speculation, and you just can't count on that. There's a lot of things that can go wrong when you're investing. There's a lot of things that can go wrong when you're investing just pure land.
But in all fairness, it's real estate, and there's so many different ways and so many different strategies to make so much money that this just isn't for me and Bob at our spot. This isn't for us right now where we are in life. But if I was very cash heavy and I wanted a farm, I would absolutely invest in land to go hunt, to go do all kinds of things.
For sure, yeah. I actually own 50 acres down south of St. Louis, but I don't really view it as an investment. It's more just a long-term hold and kind of see what happens.
I agree with that.
I can't count on it.
It's like buying gold or silver.
Exactly.
It's insurance. It's a hedge. It's to preserve your wealth.
Exactly. So commercial projects can include any type of office or retail development. This can be a great option for those with a lot of cash to invest. But for your average investor, typically your only avenue to invest in commercial is through a REIT, a real estate investment trust. And REITs are great because your risk is spread across many different deals and many different investors. But the one thing that's bad about a REIT is if things go south, your money is pooled with a bunch of other investors, and there's no real way of getting any of it out or determining which project your money is in. And it's much more of a complex market. There's a lot of factors going on. A lot of REITs invest.
I don't think commercial is for your beginning investor, in my personal opinion.
Yeah, correct.
One of my first investments was in commercial with Hippie John Pennington at Savoy Realty or Real Estate, whatever they call it. And that's a completely passive deal, and it was a good deal while I had a W-2 income and didn't know what I was doing. But once again, commercial. Plenty of people make a ton of money on commercial. Yeah. I don't love it because I don't want to compete against the internet.
Yeah, and if times are good, REITs do well. Commercial does well, but if times are bad, they're really bad. You take the Circuit City, Sports Authority, or Borders examples. Those are what a lot of REITs are renting to, and there are only so many big box retailers. I remember a few years ago, probably 2012, driving down one of the main commercial zones here in St. Louis, and there was just tons of commercial space up for lease left and right. And the point is, the returns can be really good, but it's also a highly volatile market, and you have to know what you're doing or be invested with somebody who does.
And there's a high barrier to entry. You're going to need money from a fund. You're going to need someone to manage that fund. You're going to need a team of lawyers. You're going to need a team of managers to manage the property. It's just, for me, it's a high barrier of entry.
Yeah, and also if you look at office space, a lot of corporations are allowing their employees to work from home, and there's a lot of small-time startup entrepreneurs. I think the trend is really going more towards smaller spaces and working from home. So that's going to probably affect office space much more in the future. Multifamily can be a great choice as well. I'm a big fan of multifamilies, but again, there's a high barrier to entry. You need a lot of money to invest here, and every big-time apartment owner I personally know says that the sweet spot of apartment projects is over 100 units. If you have anything less than that, it's kind of a management hassle, because when you get to 100 units or more, you have some economies of scale that start coming into play, and you can afford to have an on-site property manager. Again, you have to have some real money to get started, or pool your money with other investors.
And most people get into multifamily because it's one heater, one roof, one of everything for like 8 or 9 units or doors. So I completely understand why people do multifamily and why they like it. For us, though, we can create more cash flow doing single family. But, when something bad does go bad at one of our properties, I'm kind of like, or we have to replace a roof. I'd be like, oh man, if we were multifamily, we could replace one roof for 10 doors.
Yeah.
So plenty of people make plenty of money in multifamily, but it's a higher barrier to entry.
Correct. And then lastly, we have single family. This is Jimmy and my favorite. And the reason we got into this is just that, a few years ago after the subprime debacle, residential real estate was highly distressed, and it still is in many markets. There's a very low entry price. The average house we're buying, our average investment is right around $45,000. And I know that might sound crazy to a lot of you in some higher price markets up in New York or Boston, Chicago, and out on the West Coast. But we're buying houses all day at that price. And we've actually bought them as low as $10,000. And our high range is probably $90,000. We don't go much above that. And we'll get into why that's so in future videos.
What really excited me was one of our first, remember how we used to kind of cruise around?
Yeah, for sure.
North County and just chat. And then occasionally we would get an Uber and we'd have a couple beers. And those were some of my favorite days. But what you said something to me about the fact that to build this house would cost X and to buy it would cost Y. And what was that you told me?
Yeah. So there's an analysis that's done in the appraisal world called replacement costs. It's basically if you were to build a house from scratch today with current material and laborers, with current material and labor costs, what would it cost you to do so? So and that's the same thing that a lot of insurance companies base their values off of. And so for these same homes that we're buying for $45,000, to get a lot and to build it from scratch today, easily going to cost you $100,000 to $110,000 if you know what you're doing. You got all your ducks in a row. So you're basically getting the house for half off. And if I like buying things on sale, it's houses.
And when you told me that, I was like, hit the gas, let's go.
Yeah. And the other thing that's great about single families is you got relatively high rents. You get a better quality tenant because you're dealing with families. These are good homes in good neighborhoods, and they have great cash flow. If you look back at the real estate crash, the people that got into trouble were those who were counting on appreciation, the speculators. Most investors who were holding for cash flow weathered the storm just fine, and rents stayed flat, or they actually increased because there was greater rental demand from all the people who got foreclosed upon or who lost their job and couldn't afford their big fancy house. And Jimmy and I are both followers of the Austrian School of Economics, so we're constantly asking ourselves, what's the safest play in the market, and how can we hedge against any downturns? And in our minds, that's buying single-family cash flow houses.
And people are always going to need a house. They're always going to need a place to sleep and cook their food. Hypothetically, I don't know if people are always going to need brick-and-mortar commercial space to conduct business. They can do a lot of business on the internet. And that is another reason I like single-family as opposed to commercial.
Yeah, very good point. So what are some of the different strategies when investing in single-family?
I'll take this one because I especially hate this strategy. So for all the TV shows, everybody thinks if you invest in real estate, you're a flipper. For us, flipping is horrible because we have to take all the risk, do all the time, and we're going to pay a capital gain unless we hold on to the property for 2 years and pay the interest and carrying cost on that property. So the pros on flipping is a big payday and it's quick money. The other thing is it's speculating, and I hate speculating. I want to create assets that kick cash to me every month. The cons of flipping are it's high risk. You have to find that one buyer who's going to take that at the price you have. Right now, there's a huge rental market in St. Louis. So we get a property, fix it up. We have plenty of people that we could market the product to, and we can sell them a call option that they could buy it from us one day. The other thing I hate about flipping is the holding cost. You're paying money, and you have an asset sitting waiting for that one buyer. It ties up a lot of capital with the rehabs. There's huge taxes. Once again, you take all the risk, put in all the capital, and you pay short-term capital gains. I hate scenarios where I take all the risk and the government takes all the reward. Not all the reward, but a big chunk.
A third of it,
Yeah.
I mean, I know a lot of investors who flip and who make good money doing so, but again, going back to what's the downside with flipping, there's really no plan B. A lot of the folks who got themselves in trouble in the last crash were flippers, and they had 5, 10, 15, 20 projects going on, and when the market turned on them and prices were dropping 5% every month, they got caught holding the bag and were pretty much screwed and went out of business overnight. So it's just not a really long-term dependable thing to do. And you can sprinkle in a few flips, but if you don't have rentals as a part of your portfolio, it's just a lot higher risk proposition.
And just an added corollary, when I watch these TV shows about flipping, there is no chance they're not lying at the end number. Like, they never show the hits they take.
Oh,
they all make $100,000 every deal. It's it's complete bullshit.
Yeah. Well, we don't need to talk about how you shouldn't pay attention to everything you see on TV. But all right, so another single family strategy is having rentals. And pros of having rentals is obviously cash flow. You're holding the property long term, so you can take advantage of long term appreciation. There's a few other income streams that are coming into play now that we're holding the property for a longer time period. You also get principal pay down because you're paying down your mortgage every month, which is a little bit of a hidden advantage. And Uncle Sam loves people who have rentals. There's huge tax advantages for people who hold properties long term. You get to take advantage of depreciation and long-term capital gains when you sell the property. If you look at short-term capital gains, for most people, it's going to be right around 35% tax hit. Long-term capital gains, you move yourself to 15% long-term capital gains. So saving 20% of your taxes right there. Cons.
I'm having flashback about all the cons from when we used to do rentals.
Yeah,
it was very painful.
Yeah, Jimmy and I had some just straight rentals. We had one 4-family in South City and a few single families before we discovered the strategy we're gonna talk about next. And the big thing and the big downside of it was one, management can be very costly in time and money. And if you're not managing your properties yourself, you're hiring a management company.
It can be emotionally taxing as well.
Yeah. Tell me about it. You're getting calls in the middle of the night. You're always on call. You're worried about what your tenant's going to do, and they can't handle a simple thing like switching a breaker on and off or changing a light bulb. Your management company is going to charge you 10% most likely on single families, and they're going to probably take a fee when they place the tenant.
And they're going to charge you for labor, and most of that labor is the guy sitting at the Home Depot Pro desk bullshitting, and he's still on the clock, and you're still paying for that.
Yeah, they upcharge you all along the way, and they kind of bend over backwards to do every little repair request that the tenant wants because they profit off of it. And then every time you have a tenant move out, you have to do another make ready. You're gonna have to, even if a tenant took great care of the place, you're probably gonna have to steam the carpets, touch up the paint, do some minor work, and there's always a risk of your tenants tearing up the property.
And there's no partnership, there's no loyalty between you and the tenant. When we get to the next strategy that we employ, there's a partnership between us and the tenants, and we have aligned goals.
And that strategy is lease options.
Boom!
This is our absolutely favorite strategy in real estate. It's kind of like a hybrid between flipping and having rentals, because we're getting the long-term appreciation, we're getting the cash flow, principal pay down. But we also have the possibility for a big payday in the short term if and when our tenant buyer exercises that option. So we can still make the big money a flipper makes without all the risk and all the headaches of managing a big rehab project. And then we're also eliminating a lot of the downsides of rentals because now we're working with a much higher quality tenant. We're getting a non-refundable option deposit when people move in. These are folks with an ownership mentality. They want to buy the house. They just don't have the financial wherewithal, the knowledge of credit, and what it takes to get mortgage ready. And we kind of coach them up on a few of those things to get them to that point. But the lesson here is that these folks have skin in the game, so there's not as many issues tracking down rent, and we are never worried about tenants tearing up the property. And they handle all the ongoing repairs and maintenance. So from a management perspective, it's so easy. We never get calls about things going wrong with the property. The tenants handle absolutely everything.
It's not really a management perspective. It's a partnership perspective.
Yeah.
They want to own a home. We want them to own this home. I look at it as they're spending 2 years with us as like a reprieve to get bank ready to finance that house. So I enjoyed the relationship, the partnership we have with our tenant buyers immensely more than when we have tenants.
100% agree.
Oh, and then the con, tenants tear up the property, which is the same con as a rental. But what people will say the downside of lease option is the deferred maintenance. And, we've accepted that risk, and we like to batch the maintenance. Instead of running every month to fix a little thing on a house, I'd rather send one maintenance guy, do a week-long project, and fix all the deferred maintenance at one time.
Yeah, and the money we're saving on the cash flow and the time costs more than makes up for any deferred maintenance. So what types of houses do we like to buy? Well, typically we're purchasing 2 to 4 bedroom homes. 1 bedrooms are out there, but there's just no demand for them. Unless you're a single person who's young, there's just too small of a market to reliably rent those on a consistent basis. We do have, I think, 1 or 2 5-bedroom homes, but they're not as many out there. Hard to get in our price range to cash flow well. So most of our properties are 2 to 4 bedrooms. And we definitely learned a lesson on small homes. We've got a few properties that are less than 1,000 square foot, but we quickly learned that there's not as much rental demand for those. So 1,000 square feet is our minimum now for any new property we purchase, and we prefer much larger homes than that. As large as we can get. We have a few that are 2,300, 2,500 square feet, but our bread and butter is 1,200 to 1,500 square feet. That's probably most of our homes. And we also prefer homes that have garages, basements, and larger yards if we can find them. I know some investors don't like slabs. I personally don't have any issues with slabs. One, it's an area that if the tenant moves out, they're not going to leave any extra junk down in the basement that we would have to clean out. And less chance that any pipes can freeze and break in the winter or get broken into and stolen, and less chance that you're gonna have a foundation issue, cracked, leaky, moldy basement. So I don't mind slabs. Jimmy, any thoughts?
They cash flow just as well as basements, so I don't really care.
Yeah. So here are some examples of some properties we've purchased. That one in the top left on Marvin, that was actually our very first lease option deal. We got a non-refundable option deposit of $5,000, and I think we've got this one rented right around $850 per month. Our total investment for that house was $30,000. And look at it, nice cute house, great neighborhood, blue collar neighborhood just south of the airport here. For those who are,
it's in St. John. It's in the Pattonville schools. It's a great school district. I think the tenants went in there because of the schools.
Yeah. The top right house on Mohan, this is kind of our crown jewel. This is a 2,300 square foot house on an acre of land. This was a short sale deal. Believe it or not, we picked up this house for $75,000. And our $75,000 investment is getting us $1,535 per month in rent. This one is an absolute cash cow when it comes to the cash flow. The property on the bottom left, this is a little bit more of our bread and butter type house. Again, nice house, great neighborhood, good school districts. And we bought this property, total investment actually between purchase and repairs was $45,000. And I think we got it rented out for around $950 per month. Property on the bottom right, Sims, investment of $35,000. We've got it rented for $850 per month. There's a few more example homes. Top left property on Periwinkle, total investment was $45,000. Again, who wouldn't want to live in that home? Great house, solid. Most of our homes are built between probably 1940 to 1970. We've got a few outliers, but there's not too much that can go wrong on these homes. They're very simple. Not too much to analyze when it comes to a 1,200 square foot house. It's pretty easy to estimate, repairs as far as paint, carpet, flooring, etc. That property in the top right, I love Gene. That one's close to 2,000 square feet. We picked that one up for $45,000. I think we've got that one rented around $1,200 per month.
And if that house was on the East Coast, that would be $900,000 house.
Oh, easily on the coast. Yeah. If not $1 million, actually. I mean, it's absolutely insane what you can get for your dollar here in St. Louis. The bottom left, this is one of my favorite homes we purchased recently. That house on Raymond, I know folks might say it's not too pretty, but we bought that house for $10,000 and it was pretty much move-in ready. And it's also on an acre of land, and we've got it rented out for, I believe, $800 per month. So again, that one is a cash cow for us.
And so I've been shocked going through this process that I've just been shocked at the premium that land is getting us. You know, obviously Raymond's not the prettiest house we own, but that tenant loves the land.
Yeah.
Like Dewberry, how much land is that?
Oh, that's about an acre and a half. Yeah.
And these are all in Spanish Lake, and there was a Netflix video about Spanish Lake and the tragedies. I don't know if you want to call it tragedies, but it didn't make Spanish look that great. But like when my dad was growing up, Spanish Lake was a rural area, and these houses have so much land. I mean, why do you think the tenants like the land so much?
Generally, a lot of landlords I know don't like properties that have land because, you know, a storm rolls around and they've got to do a lot of yard cleanup. But now with our tenant buyers, they're kind of responsible for any of that stuff. I mean, it's just, you know, if you were looking for a property, you'd want land. I'd want land. It's nice to have privacy. It's nice to have an option to build a pool or build a playground for your kids, and the kids can run around and you know,
a place
do
for
their
the dogs.
thing. Yeah, exactly. You know, everybody wants more land. So if you can get it, great. And so that's why we look for properties that have a little bit larger lot, because our lease option tenant buyers love it. And this house on the bottom right, Soria, we bought for $35,000. I mean, look at that house. I mean, it's a split level. I know a few people don't like those, but you know, for $35,000, a nice house built in probably early '80s by the looks of it, and you know, 2-car garage. Come on, folks, that thing's rented out for $900 a month. You cannot beat that type of cash flow. So I hope you enjoyed this video. If you want to find out more about us, you can go to jointhouseproperties.com. Jimmy's phone number is there along with mine, and you can email us at jointhouseproperties@gmail.com. Thanks so much, folks, for joining us here today.
Bye.